This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and I'm kind of busy today. Normally on a CPI day I would go live for the CPI data, but like I said, I'm a little bit busy today. So what I want to do is talk about CPI and inflation. I want to give you my expectations for this print and we'll talk briefly about what might be happening next print. I just want to basically outline that situation for you guys. And I always get a lot of questions like, well, if it's cold, does that mean it's going up or down? If it's hot, you know, what is the implications for the market and direction? So we'll discuss that. And then I want to spend a little bit of time on Bitcoin and the charts, because I believe what's about to happen is one of two scenarios. And I want to show you both of those so you're prepared for how to deal with them. I'm going to show you the one that I think is the most probabilistic. And the one that I think is the most probabilistic, to give you the short answer, is we're going to form a bull flag in Bitcoin and then resume to the upside. So I'm going to show you exactly why I see that and how I think it will play out. And I think we're going to find a quarter cycle low in here. And the important part about this bull flag break, should it occur, if I'm right about this, is we should see all of the people that are currently calling for this to be a bull trap that resolves to the downside become invalidated. They should be forced to flip bullish on a bull flag breakout here. So it's going to be a pretty interesting time. And of course, if you want to follow along in real time and see how all of this works, then make sure you hit that subscribe button. Now, before we get into today's episode, I want to briefly talk about risk. A lot of people, and I think they're kind of half joking, right? But a lot of people have been saying things like they feel lectured by me about the amount of time and energy I put on risk management. And a lot of people are kind of making jokes like, oh, why does Uncle Camel have to keep putting me in my place about risk? Or why do you have to keep harping on about risk management? But the absolute truth of the matter, okay, is it is deeply concerning to me that most of the influencer accounts online, most of the crypto Twitter space, YouTubers, whatever, never talk about risk management, okay? If you've been watching daily content from other channels for many, many months and you've never once heard these people talk about managing risk, then the absolute truth of the matter is they probably do not have longevity in this career. They probably do not have longevity as traders, and they probably have lackluster account performance, right? They probably make a bunch of money and give it all back, make a bunch of money, give it all back. And the net effect is they have mediocre at best performance. Okay, so this is why I spend so much time on this, because without this principle, you cannot make money over the long term. The other thing is there is a risk management tutorial in the playlist on this channel, okay? And it only has about 6,000 views when we get 10,000, 12,000 average daily views on this channel. So that tells me the vast majority of people that watch my content don't make any money trading, okay? And even if right now you're saying, well, I've made really good gains in the last 2 years, respectfully, that's because we've been in a rip-roaring bull market where every dip has ultimately resolved to higher highs, okay? But without proper risk management, without this being implemented, then you will not be able to survive the long term, okay? And one more time to harp on this, okay, because it is deeply concerning to me. All of these people online portray themselves as real traders, and they're happily showing you screenshots of profit, which I make the case is completely worthless and does more harm than good, okay? If you're especially newer to the space and you're seeing people print like $100,000 on a single trade and you're working for minimum wage and you've only got a $1,000 account size, it can be really disheartening to be looking at other people and going, oh man, I need to take more risk. Oh, this guy's making all this money and I'm doing rubbish, right? But comparison is the thief of joy. It's all relative. And many of these online traders that I see in gurus, okay, I'm not going to call anyone out by name, but I can think of a few YouTubers that got into Bitcoin so early that they are now 9 or 10 figure net worthers, okay, hundreds of millions to billionaires. And I see them posting trades where they're making like 100K on a trade or 200K on a trade or even $1 million on a trade, right? But as a percentage of their net worth, if you're worth 100 million quid and your trading size of 100K or 250 or even $1 million, okay, this is like play money for you. This is money you would set on fire at the bottom of your garden and not care, right? If you're worth $1 billion and you're trading like 250K size, 250K is a lot of money to a lot of people. But if you're a 100 million plus net worther, then this is pocket change, right? You'd light a cigar with that. So it's all relative. I really think those screenshots of profits really just do more harm to people than good. I think they're also probably an attack vector for, you know, people that don't like to see others succeed. Anyway, I'm kind of getting sidetracked here, but the point is people are very, very happy to post screenshots of profit online and say, look how good I am at trading. But if they never talk about risk management, the chances are they have no longevity in their career. They're probably not going to be here very long. Or the other thing is they are not showing you their losses and they regularly have account performance that is essentially flat, mediocre at best. One last thing I wanted to point out here about risk management, okay, is I was making this case during this whole yen carry trade unwind, okay? When we got to the yen carry trade unwind, the Camel Crew went flat, having been in longs since all the way down here, okay? We went flat here on the Thursday before then the Friday unfolded and we had this big unwind. And it was the same in the stock market, the S&P 500 and the NASDAQ, right? We got out on this Thursday candle and then we avoided all of this. We sat all the way on the sides until eventually risk on returned and it was safe to get back behind some longs. And the reason I bring this up, okay, is not to blow my own trumpet or anything like that. The reason I bring this up, and it's so important, is I was making the case back then in real time as well, that you should be looking around you at how people handled that situation. This was a highly uncertain, highly risky time in the markets. And I saw almost nobody start to come onto YouTube and come onto Twitter and say, it's time to go flat, it's time to take some off the table, it's time to respect risk. Because in here, there was no way of knowing if we were going to have a C19 type plunge, right? There was no way of knowing how bad that was going to be until the market had proved that to us. And all I kept saying at the time was look around and see who is out here going, buy the dip, buy the dip, buy the dip. Because whilst they got lucky this time, okay, and buying the dip worked out, what they really did was expose themselves for not being able to pivot when risk shows up. They exposed themselves to not being able to read charts properly, for not being able to stay on the right side, and most importantly, get out of the way during risk-off moments. And the reason that's so important is the people that were screaming by the dip here and got away with it this time will also lack risk management, lack the ability to get out and move out of the way of risk when the final top comes in. And when the final top comes in, those same people that were screaming by the dip here and had no idea how to manage risk, had no idea that this could have just as easily morphed into a massive, massive, massive C19 type plunge, they're going to be having that same buy the dip attitude in here, but next time around, the dip will keep on dipping, okay? And that is what I mean by these traders do not have longevity. So always look around you and understand who is able to respect risk, who is able to see potential downside scenarios develop in real time, get out of the way, and then get back in once it's safe to, versus those people that just scream buy the dip on every single dip, knowing that eventually, okay, they're not going to get away with that. And it's during these risk off moments that everyone who is incapable of managing risk and the fake traders out there, okay, the ones that never talk about risk management, they just show you screenshots of profit or tell you how good they are after the fact. It is during the next downturn that most of those people are going to go broke. Most of them are going to disappear. And I've been making the case over and over again. You will see people have to take time out of this space, right? You will see them go, family issues. They'll just go AFK. They will tell you they need time off for their mental health. But really what's happening is they didn't know how to manage and respect risk, and then they got wrecked, okay? That's what's going to happen. You're going to see that even the people you hold in the highest possible regards right now, if they're never talking about risk management, if they didn't show you that they were capable of getting out of the way during downturns in here, then you better believe when the top eventually comes in, they're going to get wrecked just like everyone else. So I know it's probably annoying that I keep harping on about risk, okay? But this is what real trading looks like. Without this, you are not going to make it. You're just wasting your money. You might as well go and spend your money on trainers and Chinese takeouts and partying, chasing after the birds, because otherwise you're just going to lose it in the stock market without risk management, okay? So there's a tutorial for this risk management in the playlist, like I said. Please, please, please not only watch it, but implement it, because without it, you cannot have longevity. And if you want to understand this risk management principle, okay, there's a PDF you can download in the pinned comment and description to all of these videos, and it contains a section on risk management as well as how the cycles work, and there's a table for all of the data for the cycles and the counts and all of that stuff. So if you're interested in truly implementing this risk management, I highly recommend you download that PDF from the pinned comment or description of this video. So CPI next, and then we'll do the Bitcoin charts. I've been long making the case that anything you do to the MT rate of change shows up in the CPI, okay? Down, sideways, wobble, and down. And therefore, we have started to see the down manifest now after a perceived sticky inflation. And for CPI, I therefore expect us to continue to see cold prints, meaning below the prior readout. Now, here's where this gets a little bit interesting. The US government reported rate is about a month behind trueflation. Now, trueflation made it all the way down to 1% ahead of today's CPI print. So I very much expect, not just because of this, not just because of other leading indicators, but also because of trueflation, today's CPI print to be cold, meaning below the prior readout, below expectations. And if it is, then happy days, all is still going according to plan, all is still going according to the base case hypothesis of the channel. But since this Trueflation print, this is the real-time inflation according to Trueflation, and as you can see, it has crept up a lot, okay? It has crept up an awful lot, which makes me wonder if, number one, we're going to see the resumption of down and then a big pop-up in inflation at the next month's print, okay? Of course, we'll track this in real time and deal with it then. But the other thing to be aware of is, if today's print is not cold as expected, and instead it's kind of sticky or hot somewhere in this neighborhood, okay, then what that probably means is I'm going to have to entertain being invalidated on my idea for inflation and CPI, and that we may well end up seeing a push up in inflation. Now, of course, it could just be a counter trend wobble that then resolves down. We don't know. But for now, my expectation is, to be crystal clear about this, I expect today's CPI print to be cold, significantly below the government reported rate of the prior month. And then from there, we'll deal with it. I'll come back tomorrow, we'll assess the data, we'll take a good look at it, and we'll figure out what's going to happen. The question people always ask is, okay, Camel, well, what does it mean for markets? What if the print is cold? Do markets go up or down? What if the print is hot, etc., etc.? The reality is I say the same thing every month, okay? There are always going to be chop volatility games, lots of stop runs, lots of stop hunts on the CPI data release. We typically see up, down, up, okay, or we see down, up, down, and then we get a true direction revealed. So my strategy for CPI is the same this month as every other month we've had. I do not trade CPI. I don't even really need to see the candles today. To be completely honest with you, I negate and neglect any price action that occurs on CPI, and I will be looking for Thursday and Friday's price action to tell me the direction. So whatever happens today, I don't really care. And then if we're trending up Thursday and Friday, we're trending up. And if we're trending down Thursday and Friday, I will accept we are starting to trend down. So that's how I handle it. I really, like I said, don't even need to look at the screens today. Anything that happens on a CPI day, like I said, I just completely ignore, and then we'll look for the true direction to be revealed Thursday and Friday. So that's inflation, right? I expect it to be colder. If it's not, we have to entertain me being invalidated on this idea. And like I said, we'll ignore the price action today and we'll look for the trend into the end of the week and the weekly closes. The cycles still have space in them, so not really too concerned there. And the other thing I wanted to focus on now is Bitcoin, because I believe I know what's setting up here. And of course, I could be wrong about this, as always, but if I am, I'll let you know, and we'll stay on the right side of the trade. I believe, currently from this daily cycle, okay, we know objectively speaking, this is day 9. I believe we are going to work towards a quarter cycle low around day 15, which is Tuesday of next week. So I think what is going to occur here is some kind of bull flag, some kind of pennant, some kind of squeezing into that day 15 low, which would be, like I said, Tuesday of next week, sometime around there. Obviously, if it's Monday, okay, or Sunday or Wednesday, give me a couple of days wiggle room, okay? This is not an exact science, but sometime around day 15, I'm expecting to see a squeezing, a bull flag, and then I think we're going to get a breakout. Okay, now I've drawn this very, very tight. It may well be a lot more volatile than this. Let's say like this, okay? Okay, and we'll get some kind of squeezing or flag pattern, either like this, or perhaps it forms a pennant, something like this. And then what I'm expecting out of that day 15 quarter cycle low is a resumption of the uptrend. Okay, and like I was saying right at the start of the video, if we get something like this play out, then I think everyone that is calling for this to be a trap, everyone that is saying, you know, there's going to be a big dip and a shakeout or whatever else, I think as this breaks out, they are going to be forced to flip long here, forced to accept that this is not a trap, and what we've had is a true breakout, a flag, and now we're impulsing off again. Okay, so potential long entry out of here if we can get it. It depends. For the record, okay, I'm not really one for calling price predictions or calling exact numbers out or anything like that, but I, largely speaking, expect, if I am right about this, we are not going to trade below 80k. Okay, so I think anything above 80k here in a flag or a pennant type shape, and then a breakout, and I'll be able to say, yep, that's exactly what I expected. That makes the most amount of sense to me. And of course, if I'm wrong about this, and the people calling for this to be a trap are right, what we would expect to see from here is, instead of that flag break to the upside, we would expect to see this thing curl over or very sharply start to lose that 80k level and start to maybe head back down to this neighborhood around 70k. Now, for me, that would be quite alarming for the bull case. That would have me thinking, oh my goodness, this whole thing is Wyckoff distribution that was up thrust, and now we've got to entertain a downside scenario. That would not be healthy from a cycle perspective either. So I don't want to see that, but like I said, I really don't think that's what's at play here. So it's nice and binary, right? If I'm right, we're going to flag or pennant in here, probably hold above 80k, and then resume very, very impulsively to the upside out of that flag or pennant. And if I'm flat wrong about this, we are going to start to trade below 80k, and then we're going to have to entertain something else being at play. not aiming for 100k plus Bitcoin and maybe having to entertain that this was indeed some kind of trap before a violent move to the downside. So that's what I think is at play. Again, I'm ignoring the price action today because of CPI and all the games and chop and volatility, and we'll just keep taking it one day at a time. If you're a level 3 member, okay, this pullback here, a lot of people have been like, why haven't you been adding to the crypto positions, right? As you know, we've got a bunch of crypto-related stocks in the member section, okay? They're all sat healthily in profit. Less is more. I don't want to keep trying to force more trades and stack more positions and get greedy. I want to just let these stuff move into profit. And then when we got good gains, we can start to move stops up, lock that in, and then add without taking additional risk. But this is kind of what I've been waiting for now. I've been waiting for some kind of setup like this from Bitcoin, okay, into that kind of Tuesday next week time frame. And of course, the crypto-related equities should all start to produce back tests of gaps or back tests of support breakouts and flag like this. And then what we will have is an opportunity to get some longs on for the crypto-related stocks with a nice tight stop and a hard invalidation as we start to push up out of this flag. So that's what I've been patiently waiting for. I think gold is probably going to do something akin to my yellow squiggle. I think we've probably just forced the low here, right off that blue support line. A little bit of a bounce and then down into a weekly cycle. And then I think it should be party time, some big trades and a bunch of mining stocks for the members. As for the stock market, okay, we're still long and strong, still respecting the cycles. Not sure if this is an inversion. I'm going to delete this for now. But yeah, happy days, right? Long and strong, daily cycle low, not too far away. And we'll keep pushing it until we have reason not to. Same for the NASDAQ, new all-time highs, bit of shakeout today makes sense. And then hopefully we can close the week bullish. And the Dow Jones as well, right? Similar deal. So long and strong, continue to push there. Not much else to say. I reckon when CPI comes in cold, assuming I'm right about that, oil is going to plunge. Okay, and again, that all fits with the base case hypothesis. And so other than that, okay, I hope you all have a good day. I hope you don't get chopped up. I hope you don't mess around with the volatility unless you're a highly experienced day trader. And other than that, take care. See you tomorrow. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns.